Why does the United States remain the world's superpower? It's not simply because of big tech or military power. It's because of the dollar. The United States runs an enormous trade deficit with other countries. Paradoxically, isn't it strange that the country that loses the most money is the world's wealthiest nation? The secret to America's global dominance lies precisely in these losses. These are $10 bills from the past and present. One is from 1928, and the other is current. Do you see the difference between these two $10 bills? Here it is. This means that in the past, dollars could be exchanged for actual gold. To understand how dollar hegemony began, we need to go back to the gold standard. The history of dollar dominance starts right here. Before 1971, the world economy was based on the gold standard. Unlike today, where currency exchange rates fluctuate constantly, the value of currency was precisely fixed to the amount of gold. After World War II, through the Bretton Woods Agreement, the world adopted the US dollar as the reserve currency. The US dollar was fixed at exactly $35 per ounce of gold. Why did this happen? Because immediately after World War II, the United States held the largest gold reserves in the world. This is how the global economy began to become dependent on the dollar. As a result, the dollar essentially gained the same value as gold, and world trade gradually began to revolve around the dollar. This is why older dollar bills had the phrase "in gold payable to the bearer on demand." The dollar of that era served not just as currency, but as a receipt that could be exchanged for gold. However, while the gold standard made the US the world's reserve currency, it continuously strained American finances. Countries worldwide came with dollars to claim America's internal gold reserves. US gold reserves steadily declined, and by the 1970s, due to persistent trade deficits and, above all, financial difficulties from the Vietnam War, maintaining the gold standard became increasingly difficult. If America's gold reserves were to finally run out, it would have been catastrophic. If the world discovered that the US could no longer exchange dollars for gold, it would have simultaneously collapsed America's position as the reserve currency nation and the global economy's trust, which the US had maintained at a loss until then. In 1971, President Nixon halted the exchange of dollars for gold to protect US gold reserves. This was the moment the gold standard was abolished. This event wasn't simply about no longer being able to buy gold with US dollars. The symbolic meaning of the dollar itself changed. Until then, the dollar's value couldn't decline. The dollar itself was essentially a promissory note saying, "Show this paper and we'll give you real gold at any time." But Nixon's decision gave the dollar a completely different meaning. Now the dollar became a currency with value in itself. It no longer had the backing of gold as a physical asset. The dollar now had to gain recognition for its value from people worldwide on its own merit, not because of gold, just like other countries' currencies. So did the dollar's value collapse. Surprisingly, the dollar didn't lose its dominance. Instead, it became even stronger. Let's see what strategic design America implemented to maintain the dollar's status. In the 1970s, the United States made a groundbreaking deal with major oil-producing countries, including Saudi Arabia. Oil would be traded only in dollars. This system is called the petrodollar, and it meant every country needed dollars to purchase oil. This system was backed by America's powerful military force and diplomatic capabilities. While the petrodollar is clearly an important pillar in maintaining US economic hegemony, some countries have challenged this system. Notable examples are Iraq and Libya. Let's see what happened to these countries. In 2000, Saddam Hussein's regime in Iraq made a crucial decision. They announced they would switch their oil trades from dollars to euros. At the time, this decision was seen not simply as a currency change, but as a direct challenge to the petrodollar system. 3 years later, in 2003, the Iraq War began.
Saddam Hussein and his sons must leave Iraq within 48 hours.
The surface reasons were suspicions about Iraq possessing weapons of mass destruction and threatening Middle East peace. However, academics and analysts point to America's strategic motivation to protect the petrodollar as another reason for this war. After the war, Saddam Hussein was removed, and the US-led provisional government switched oil trades back to dollars. Similar events unfolded in Libya in 2011. In 2008, Gaddafi's regime in Libya proposed a new international monetary system based on the gold dinar. The plan was ambitious. Gaddafi encouraged African nations to use the gold dinar instead of dollars for oil trades and other transactions. This wasn't just about Libya's economic independence, but a vision for the entire African continent. However, this plan was viewed by the West, particularly the United States and NATO, as a serious threat to the petrodollar system. By early 2011, when the Arab Spring movement emerged in Libya, the Gaddafi regime responded with harsh crackdowns. NATO used this as justification for humanitarian intervention and launched military operations in Libya under UN Resolution 1973. By October 2011, the Gaddafi regime had collapsed, and Gaddafi himself met a tragic end in his hometown of Sirte. Libya subsequently fell into political chaos, and the gold dinar plan vanished with it. The fact that oil, which controls the global economy, can only be purchased with dollars has enormous implications. Currently, all countries that produce oil either receive military and diplomatic protection from the US or at least follow US-established rules for oil trading. Countries without oil must buy it in dollars when importing. The entire world has reached a point where operating a nation is impossible without dollars. This maintains constant demand for dollars. US dollar has dominated the world in this way for over 50 years. However, being the reserve currency nation means running massive deficits. Because the whole world wants dollars, US dollars flow out globally. Therefore, looking at surface indicators, America runs astronomical deficits every year. But the US generates profits in various ways through dollar dominance. First, seigniorage. The US can issue dollars at almost no cost, but these dollars hold high value worldwide. For example, it costs only a few cents to produce a $100 bill, but other countries must provide goods or labor worth $100 to obtain it. Second, foreign investment. Other countries invest in US Treasury bonds, stocks, and real estate to hold dollars. This activates US financial markets and allows the US government to raise funds at low interest rates. Third, financial services. The US earns transaction fees on all dollar-denominated trades. Steady profits are generated from financial systems like foreign exchange trading and remittances. Consequently, by making the dollar the reserve currency, the US functions like a central bank for the world. America creates as many dollars as it wants, seemingly takes losses by distributing dollars worldwide, and those dollars return to be used in America. Countries around the world are currently seeking to reduce their reliance on the US dollar, with China and Russia leading the effort. China is aggressively promoting the internationalization of the yuan. Through its Belt and Road Initiative, China is creating a vast economic bloc that connects Asia and Europe while expanding yuan-based transactions within this network. Additionally, China is developing the digital yuan, aiming to establish a new standard in the global financial system. Most payments within China are already conducted digitally, from large corporations to small market vendors, all utilizing the digital yuan. China is striving to gain an advantage in the upcoming digital currency wars by swiftly digitizing its currency and expanding the yuan's influence. In 2018, China launched a futures market through the Shanghai International Energy Exchange that allows crude oil to be traded in yuan. This marks China's attempt to usher in the era of the petro-yuan. Furthermore, China has implemented a policy that allows yuan-based oil transactions to be converted into gold, challenging the dollar's dominance from the gold standard era. Countries under US sanctions, such as Iran, Venezuela, and Russia, are actively utilizing the petro-yuan system because they lack access to dollars. Russia is a major exporter of natural gas to Europe. Although the growth of Russia's energy sector has slowed due to the war, the country now requires payments for its natural gas in rubles. However, the United States has employed several strategies to counter these challenges. First, before the petrodollar system could collapse, the US underwent a shale revolution, becoming the world's largest oil producer. By doing so, the US not only aligned Middle Eastern countries with its interests, but also solidified its influence in the global energy market. Even Middle Eastern countries that once used oil as a geopolitical weapon now closely monitor US policies. Second, the US has heavily invested in game-changing industries, securing its position as the global leader across most sectors. Big tech and AI technologies are dominated by American companies. Giants like Google, Apple, Meta, and Microsoft control global infrastructure with transactions conducted in dollars. Third, the US is leading the transition to new energy paradigms. Tesla is undoubtedly the pioneer of next-generation electric vehicles. Additionally, the US holds the top position in technologies related to solar power, nuclear energy, and wind power. Even if the petrodollar weakens, the new energy economy is likely to revolve around the US. Finally, no matter what anyone says, the US boasts the world's largest financial markets. The New York Stock Exchange and Nasdaq dominate as the world's number 1 and 2 in trading volume. When compared to China's Shanghai Stock Exchange, the sheer scale and influence of the US financial market become evident. Despite China's ambition to dominate the digital currency market, the competition is far from over. The development of the digital dollar is already complete, with global distribution underway. In terms of Bitcoin mining and reserves, the US holds 37.8% of the global hash rate, significantly outpacing China's 21.1%. In conclusion, despite challenges from other nations, the US is solidifying its dominance not only through the dollar but also across future industries. Even if the dollar's influence wanes slightly, the US is steadily laying the groundwork to remain at the center of the global stage in new and evolving forms. This is why the United States is truly called a hegemonic nation. Even if one card weakens, the US always has the next card ready to play. Today, we explored how the US leverages the dollar to dominate the global economy. We'll continue to bring you more insightful videos in the future. If you found this video helpful, please like and subscribe.